What's up guys, Bill here. And in this video I'm going to review my day trading SPY today. It was an awesome day for SPY. Not the most range we've ever had, $4 or so. But if you're somebody that comes into a day with an open mind and you're not biased by macro and things like this and narratives on Twitter or whatever the case may be, and you're open to playing both sides, SPY gave us nice moves to the downside and then right back up in that classic V shape that can really pay and lead to a big day. All right, so I'm going to talk about a couple of the trades I took and ones I missed as well, and just go through my thoughts on it. So we started the day here. First thing I want to note is our small opening range. The opening range today was only about 60 cents. For me, anything sub $1 I consider small, so 60 cents is really small, right? And what does that tell me? Usually that is going to lead to a more reliable breakout or breakdown once you get that first confirmation candle. I tend to use 10 minutes. I've found that the 5-minute can be a little too fakey for me, so I like the 10, and if the close is too extended, then you can wait for a retest and get in there. So, after a little bit of chop and a fake breakout here on SPY at the opening range high and the previous week's low, which is also a double inside week, this weekly low, this is a major spot. So if you were aggressive, you could just enter a short here. But with this tight opening range, I was being a little more patient, and we got this close down here on the 5, but was also a 10. You can see it happened at 7 o'clock my time, Pacific time. We got this 10-minute close, and we weren't too far from opening range low there, only about 20 cents. I tried to go short right here, and Webull didn't fill me. I don't know how many of you guys use Webull, but it is a constant battle getting filled sometimes, especially on the indexes, because they will not let you market buy. I market sell all the time on SPY to avoid these issues. They'll let you do that, but they will not let you market buy. So what happens to me a lot of times is I have a limit order set, I click buy, and it moves just a little bit, especially on zero DTEs. They move so quick that I miss, and this thing dumped so fast that I just missed the whole trade, okay? But I did want to go short on an opening range breakdown here. Didn't really need to wait for the retest, as we were pretty close to the trigger, and I was feeling good about it. So at this point, I'm watching this candle, I'm kind of missing out, I'm kind of mad, and I'm starting to think, okay, well, where can I maybe go short again, or are buyers going to step in? And this is where things got a little bit tricky, and I'll show you why. We had a couple reasons to maybe think buyers were going to step in and turn this around earlier than they ended up doing it, and there was a couple reasons why you could have thought that maybe we could get some more downside, all right? First of all, let's talk about some things I saw that made me think that maybe we could go long here, all right? One, this is a pretty important hourly level that we were kind of coming down to and basing and flagging over. If you look at the hourly chart, you can scroll back and see that this red line from August 25th was a high that was really well respected. And then the next day we gapped over it and held it really well. That is your resistance to support flip. And it was never tested again. See, we're all the way up here. Never tested again until today. All right. So, that's one reason to think, hey, maybe buyers will step in here and bounce it back towards the opening range low at the very least, right? The second thing was, let's look at our volume. Let's do some volume price analysis. We see increasing volume on these red candles, and we see the candle size increasing with very little wick. It's very nice. This is exactly what you want to see. But then the highest volume stick of the move down is this little doji candle. Price really compresses. There's all these people piling in, but it's not going anywhere. More often than not, that's a sign of seller exhaustion. And the same thing can happen to the upside. There can be buyer exhaustion. These candles increasing, volume candles increasing, price candles increasing. That's good. Volume candle increasing even more, and it's the highest one of the run up. Tiny candle, not great. At the very least, if you're short already, you want to see this and immediately say, okay, I need to lock in a decent amount of profit here. It's not a guarantee that you're going to reverse or anything like that, but it's a little bit of a red flag, okay? thirdly, okay, so there's two things. Maybe we should think about going long here. Then we get another doji candle, an inside candle on really low green volume, and then a hammer off this hourly level on a bit of a volume tick up. Right here, I'm feeling real 50-50, but there's a couple other things I'm looking at on the flip side that make me think maybe price could also go down, all right? The first thing is we had this sell-off creates an imbalance. And if you haven't seen my video on balances, you should go and check that out. I like to draw them. You can draw them on any time frame, 5, 10, 15. But I liked it on the 10 today, and here's why. I like to find the candles with the littlest wick and the biggest volume. So it's this one right here that has my interest. And so what I do is I draw from the previous candle's low here to the next candle's high. There's your imbalance. It's a bearish imbalance, so I like to color them red, okay? And at the same time we're flagging there, we start to get into that imbalance, and we come up to this 9 EMA. And on strong moves, on days that might have a nice trending move in either direction, we get a lot of respect at this 9 on the 5, right? So we're coming up in, we're flagging, we're getting into this FVG, and we're testing it, giving a chance for sellers that missed or didn't get fully filled in here to maybe pile back in, and we've got this confluence with the 9. And then lastly, we have big, heavy bearish flow. Okay, this is MarketNet Flow from TradyTix. I have lots of videos on it. I don't use it as much as I used to. I find that more often than not, it's just going to give you mixed signals all day. But the great thing about it is when everything's aligning, it gives you that conviction and that follow through on your moves that you might not have just by looking at the technicals. Like I said, I had a couple reasons maybe I could look to go long there. I had a couple reasons that I could go short. And so the tiebreaker in my mind, I looked at the flow, and I saw this. Puts just going up, calls going down. That's called a divergence. That's what we want to see. That's the most important thing to look for on MarketNet Flow is divergence in puts and calls or vice versa, showing momentum of people wanting to go short and people getting the hell out of their calls, okay? This was happening right as we were pulling down. So ultimately, I decided to go short there, and I got a nice move. And I think these went a little over 100%, 0 DTs, and we started flagging. We were flagging forever, and we just weren't going anywhere. So I took even more profit, and the theta was starting to eat, and I was pretty much over this position. And at this point in the day, I had my eyes on one of two things. Whatever was going to happen first. I either wanted to go long off 440, and I'll tell you why, or I wanted to, draw a fib from high of day to low of day, something like this at the time, and wait for a 618 test, right? Getting it up here around this FVG, the 618 that wasn't fully filled, and trying a short there, okay? So as we can see here, the first thing that happened was this 400 test. And let me tell you why I got in here. This is a level that I have been waiting for price to come to for a couple weeks. There's massive dark pool orders sitting here at 440. Around $4 billion, okay? So these happened on August 28th. All right, let's look at the daily chart. August 28th. All these orders are parked here. It caused a hammer that day and a big rip the following day and got us up to our local high here. And it had not been tested yet, retested yet. Why is that important? All these people with all this money parked here are going to want to defend that position, okay? And there might even be more that want to pile in and add to their position on any retest of it, because this was a quick bounce, right? And, a lot of times, and also let's talk about the dark pools, okay? Anything on SPY is considered large to me if it's 1 billion or more. So if I see an order for 1 billion or more, I mark it on my chart. And with these blue dashed lines, you can see a few here. And once price kind of rips through them or below them, then I delete them. It's just kind of like deleting a gap on your chart from a daily, like these dashed lines here. If that gap fills, I delete those lines. It's just like an FVG. If there's an FVG that gets filled intraday, you delete it, right? It's not as important anymore. Dark pool is the same way, but this 440 had not been tested in this entire time. All right. We also had at that same area, you can't really see it, but a GEX, a negative GEX level, a 440 gamma exposure level, the largest that SPY has currently. And those negative GEX act as magnets for price. So this had been here for a few days and price started pulling towards it. Now with these magnet levels, they pull you towards, but once they hit, especially if they're large magnets, they snap back like rubber bands. Okay. Think of when you have a rubber band and you can really stretch it and you can really pull and you can pull and pull. But when it finally gives in, what happens? Snap, and a really hard snapback, right? These can be used for their zero GEX levels and things like that. I've really noticed it there, and it's starting to work on the larger aggregate levels as well. So not only did we have this massive 4 times size DP than what I'll even mark on a chart, so very large, we had the large GEX that had pulled price to it and then was ready to snap it back. And thirdly, it's a psych level, right? SPY loves psych levels, whether it's 450 or 400 or whatever. They're usually pretty good support and resistance levels. And finally, you have overeager bears just watching this 440 level. And if we go into the smaller time frame, seeing this little wick and thinking, oh man, look at all this consolidation. We're going to break through this 440 and the market is going to tank. And they just added fuel to the fire, guys. So as soon as we touched this level, I've been waiting for this trade forever, watching this consolidation. As soon as we touched this level, I grabbed 0 DTEs. All right. And my first target was the hourly level. I showed you this hourly level. We crashed through it earlier. We had a little bit of an imbalance even right there that we needed to fill if you wanted to draw that, right? The second one, something like that. Okay. So this was my first target and scale there. Then I'm using fibs, guys, for targets because I'm a big fib guy and I know how well they're respected. So I know there's a chance that if we do get to the 618, there's a good chance that that might be, most of the move, 618, 786. So that next pop that we get, I'm scaling on the way, taking profit here and there. But once we hit this 618 and we fill this imbalance, remember from earlier, I'm all out like right here. And those went almost 600%. And I'm happy with that. Now, do I wish? Sure, that I would have stayed in and caught this candle as well and to pop out of that extra bull flag that we had there? Yes. Just for fun, I was watching. I think they went almost 2,000% up here, which is insane. But I was very happy with this trade. That's the kind of trade that can make your week in one trade. Just patience, identifying the key levels, using data and everything to build confluence, right? I had the dark pools. I had the GEX. I had, just intraday sentiment and things like that. The risk to reward. So many things were built into this trade that makes it a great trade. And that's really it. And there was even another good example, but kind of fakey on SPY of more volume stuff, right? Let's find it. When we got up here, I think it was on the 10-minute. Yeah, another example here. This is volume. Again, right? We're moving up. Nice candle, increasing volume. Nice candle, increasing volume. Biggest volume of the run-up, little doji. So not necessarily does that mean you should just enter puts here and we're going to dump. But again, if you were still in calls here, if I had held some more, I'd have been taking even more profit there. Just thinking, okay, maybe we're getting a little bit of seller or buyer, in this case, exhaustion. But we flag and then boom, another stick. And where do we end up kind of topping out and getting tired? That inside week, double inside week low. This is going to be a pivotal level going forward, guys, all week. I just made a video Sunday about inside weeks. Be sure to check it out if you haven't. And you're going to learn about those setups and how reliable these levels can be to trade off of, to use for targets and breakout breakdowns and everything like that. But that was how I played SPY today. Hopefully that helps. If you have any questions, as always, you can leave a comment or find me on Twitter, send me a DM or message, whatever, and I'll help you out.